Hello everyone, my name is Manu Walia. Welcome back to my channel. In today's video, we are going to talk about something incredible, important for anyone involved in business or investing. How to read an annual report. These reports can be overwhelming at first, but once you know what to look for, they are a gold mine of valuable information. Let's break it down step by step so that you can easily focus on the key section that matters most. Let's start by understanding the structure of an annual report. It is not just a bunch of numbers. There are key sections you will want to focus on to get a clear picture of a company's health. Letter to shareholders. The first section we will look at is the letter to shareholders, usually written by the CEO or the chairman of the company. This section gives you a high level view of a company's performance over the year, challenges faced, and the future outlook. What to focus on? Pay attention to the company's achievement or key milestones, how they are positioning themselves for the future, any major challenges mentioned as they can affect performance in the upcoming year. For example, if a CEO mentions that their company faced supply chain issue due to global event, it's important because it could impact their profitability going forward. Now that you have the company's big picture view, let's move on to the next important section, the financial statements. The financial statements are the core of annual report. These documents provide detailed numbers about the company's performance and financial health. Let's start with the income statement, also known as profit and loss statement. This shows the company's revenue, expenses, and profits. Look for trends in revenue growth, cost control, and profitability. You want to see increasing revenue and profit margins. For instance, if a company revenue grew by 20% but expenses grew by 30%, they might be spending too much on overheads and their profit margin should be shrinking. Now that we have understand the company revenue, expense, and profit through the income statement, let's move on to the balance sheet. This provides a snapshot of the company's overall financial position. The balance sheet shows what the company owns, owes, and its shareholder equity. You want to focus on the debt level and how much cash the company holds. For example, a company with a lot of debt might be at risk, especially if it's not generating enough cash flow to cover its liability. After understanding the company's assets, liabilities, and equity from the balance sheet, the next step is to examine the cash flow statement. This will help you see how cash is moving in and out of the company. The statement shows how cash move in and out of the company. Positive cash flow from operation is key. Negative cash flow could mean the company is running out of cash to meet its obligations. For example, a company with negative cash flow may be profitable on paper but could face difficulties in paying employees, suppliers, or other operational costs. By analyzing these three financial statements together, we can form a comprehensive view of the company's financial health. Each statement offers unique insight and together they tell the full story. Now that you have understood the financial health, let's look at the next important section, the management discussion and analysis. This section is where the company's management provide context for the numbers in the financial statement. They discuss the factors affecting performance, strategy for growth, and the risk they face. What to focus on? Look for the company strategies for future growth, any change in market conditions, and risk like competitions, regulatory changes, or economic downturns. Risk factor. Understand the risk will help you evaluate how much uncertainty surrounds the company's future performance. For example, if a company says that they are expanding into new market, that could signal future growth, but if they mention risk like new regulation or supply chain disruptions, you know they could face challenges. Now that we know how the company plan to grow and what risk they face, let's move on to the next section that give you a broader picture, the auditor reports. The auditor's report is a key section because it tells you if the financial statements have been reviewed properly by an external party. If the auditor signs off on the financials, it means they have been prepared according to the accounting standards. What to focus on? Clean opinion versus qualified opinion. A clean or unqualified opinion means the financial statements are accurate and in line with accounting principle. A qualified opinion means there were issues with the financial reporting. For example, if you see a qualified opinion, it might indicate that company's financial statement have some discrepancies or area of concern that could affect your analysis. Next, let's take a quick look at another section that's often overlooked but can give you valuable insights, the notes to the financial statement. The notes to the financial statement explain the details behind the numbers. These notes give you insights into accounting method, assumption and specific transaction. What to focus on? The first one is accounting methods. If a company uses a particular method for calculating inventory, depreciation, or revenue recognition, it will be mentioned here. It's important because these methods can affect the financial results. The other one is contingencies and liabilities. Look for any potential liabilities or legal contingencies that could affect the company's future financial health. For example, if the notes mention an ongoing lawsuit worth 50 lakh, you should be aware that this might affect the company's future cash flow if it loses the case. Finally, let's wrap up with a few practical tips on how to analyze the annual report efficiently. Reading an annual report can seem like a daunting task, but with the right approach, it can become much easier. Tips: focus on key section first. Start with the management letter and financial statements, then move to the MD&A and auditor reports. Look for trends over time. If possible, compare the current report with previous years to identify trends in revenue, expenses, and profitability. Use ratios. As we discussed in our previous video, calculating financial ratio can help you quickly assess a company's financial health. To summarize, today we learned how to read an annual report focusing on point number 1, the CEO's letter and the big picture overview. Point number 2, the financial statements including income statement, balance sheet and cash flow. Point number 3, the management discussion and analysis, risk and future plans. Point number 4, the auditor's report and the importance of the auditor's opinion. Point number 5, the notes to the financial statements and their critical detail. I hope you found this video helpful. If you did, please like, share and subscribe to my channel for more finance tips. And feel free to drop any question or suggestion for future videos in the comment below. This is Manvi Walia signing off. See you in the next video. Bye bye.